Now today you're going to hear about this company which is very stable, has high barriers to entry from its competition, is also an essential service provider. This company is Keppel Infrastructure Trust. Now I've actually seen fans on this channel asking about KIT, and today we'll do a deep dive on this company. Today what you're going to hear a few parts. Firstly, I'll give you a background as to what Keppel Infrastructure really is. Then I'll give you my pros and cons as to whether you should get invested into this company or not. And before I get there, let me show this chart about Keppel Infrastructure Trust. What do you realize? Very stable, correct? Last 5 years, you see it hovering 50 to 60 cents thereabouts. And the good part is, if you look on the right hand side of things, free cash flow to equity, it has been growing since 2018. Later I'll cover a bit more on that. And the interesting part is it's maintained its dividends across the years. So if this topic of Keppel Infrastructure Trust interests you, continue watching on. Hi guys, welcome back. Now Keppel Infrastructure Trust, KIT, has been around for many years. Let me give you some history of it. It was previously known as City Spring Infrastructure Trust. Now in 2015, Temasek, which is the holding company for a few of these assets, actually rounded them up together. City Spring Infrastructure Trust was merged together with Crystal Trust and Keppel Infrastructure Fund Management. So some of the assets were mixed together, which include some water plants, which included some electricity plants. So as of now, this is the exact portfolio that you would see if you are an investor today. You realize that they have distribution and network, which is the key component of things, which owns a few of the power plants. They also have energy and they have waste and water. That is why KIT is into essential services, because electricity, water, these are things we will not live without. These are things that we will still allow workers to go to. These are things that are really not disrupted by even a pandemic or even economic crisis. In terms of geography, you realize that on the right hand side, Singapore is the bulk of it, simply because the water plants are still in Singapore. And of course, right now they've added Philippines, which is a new asset. I'll touch on it in a quick while. Now, Keppel Infrastructure Trust, the main asset right now is actually Ixiom. This is actually an Australian chemical group that was acquired in 2018. Now, with Ixiom's acquisition, they now have quite a few more diversification in terms of its assets. Let me bring you through what they have. In terms of its three business classes, distribution and network, you realize that City Gas, Ixiom, Basslink, Philippine Coastal are its key assets. Now, these are actually gas plants or chemical plants. And if you look in terms of energy, they also have something in Singapore called Keppel Merlimau Kogan. Now, this is again a gas and power plant. I'm not a chemical engineer, so I see them and they look very majestic. But after all, I think they are very key infrastructure components. And in terms of waste and water, Singapore, we pride ourselves as having our own desalinated water. There's that Senoko plant, there's that Tuas plant, and Ulu Pandan new water plant. So all in all, if you want to have a quick snapshot, gas, chemicals, electricity, these are the plants that they own. Going to be around, not going to be disrupted too much by innovation and stuff, correct? So as always, these are very reliable assets. In terms of geography, let me show you another breakdown. This shows you that majority of the assets are 100% owned by KIT. Some of them are in co-ownership, and in particular, the right hand side, waste and water, 70% of Sing Spring desalination plant. Now, this was actually purchased over from High Flux. Of course, High Flux has been in trouble. We've seen news before on it. And just to give you a quick update, as of this year, January, Keppel Infrastructure Trust has expressed that it's keen on the Sing Spring remaining 30%. They do want to fully own this plant at some point of time. And they do have the budgets. Later I'll show you about it. Now, to understand the business of KIT, let me use this quick summary to show you about things. What do you see at the top? They break down in terms of the key assets, correct? City Gas, Basslink, which is the electricity asset that they have in Australia, Ixiom, KMC, and waste and water. What do you realize that what is boxed up over here now that I have for you? You realize that the profit is actually quite thin, correct? Only City Gas seems to be in profitable grounds. Basslink lost a lot of money simply because they got into some legal issues. They have fines to pay. As a group, they were loss-making for second half 2020. But for such businesses, this is a trust, which means the main component of why they have profits and losses are determined a lot by depreciation. If you buy the trust, you own the plant. The plant gets wear and tear, correct? Becomes older, loses its value, needs replacement and stuff. So depreciation is a key component of owning such assets. So what do you realize? If you factor in without depreciation, the numbers are very different. That's why when they present to investors, they typically present free cash flow to equity. And because this is a quick tutorial, I wouldn't dive too much into these concepts like free cash flow. You should explore it a bit deeper if you're keen to invest. Most companies present in terms of net earnings, net profits. But for this trust itself, they usually present in terms of free cash flow to equity, simply because depreciation really skews the game a lot. And the main thing is this, the good part of free cash flow equity is increased since 2018. So that's a good part of measurement. Now let me quote from you what Keppel Infrastructure actually worded before in one of their presentations. Keppel Infrastructure is a business trust. It allows distributions to unit holders like yourself out of retained cash and residual cash flows. This is unlike companies which are governed by Companies Act that can only make payments out of accounting profits. So as I said, they don't have a lot of accounting profits simply because depreciation is a big part of it, but they can still pay you dividends. So comparing, a trust and a REIT, let me also quickly explain things. REITs, they have a mandate. They have to pay out 90% of their profits, their earnings to you as a shareholder. They also have a cap in terms of how much debt they can own. A trust is slightly more liberated. And for REITs, more or less, they're affected by economic cycles, whether you own offices, malls. These kind of things are still impacted by economies. But for a trust that owns infrastructure assets, it really doesn't matter what kind of economic cycle it is, or whether there's a pandemic or not. So that's the key difference. So if you're investing in KIT, your main thing that you want is always dividend yield, correct? If you're a retiree, you want dividends. Then maybe if this company can provide you dividends, this could be a worthwhile asset to own. And what do you see over there? You realize that dividends has been pretty stable. 2017 onwards, they paid 3.7 cents. Last year, slightly different. That's because of that legal issue. But moving forward, they could still pay back potentially 3.7 cents. Now, having explained how Keppel Infrastructure Trust works, let me explain now to you my preferences and dislikes about this business. Now, before you get there, inviting you to smash on the like button because it's taken our team hours to produce this tutorial for you. So hopefully you've benefited. Share with a friend that should learn and see a bit more before getting invested. Again, if I need to press on subscribe. Because while I was doing this with my team, I realized that, hey, since we're looking at trust, up next we could look at Netlink Trust, which is another trust business which has a lot of assets in Singapore that are related to 5G developments of things. So if you're keen, press on subscribe also. Now let's move back to the charts. And what do you realize? 5 years has been really stable, correct, for Keppel Infrastructure Trust. But if we look in terms of what is done through history, you realize that they suffered a big fall back in 2008, correct? A very scary fall from $1.20 all the way to 40 cents. Now, that period of time, their assets weren't performing well. So if you want to be an investor, you should be very savvy about what they've done in the past. That's why I'll lead off with what I don't like about KIT first, because I'm on that side of fence. Later, I'll try to run out with some positive parts, just in case you're interested in becoming an investor. On the negative side of things, I always believe trust businesses or asset-heavy businesses are dangerous in that sense. They can get into certain issues, because if we think back on Hyflux, which is also another asset-heavy business, Hyflux was once a market darling. Its CEO was, on Forbes magazine and stuff, and Hyflux actually expanded very quickly. Let me pull up this image for you to see some of his history. He actually owns Tuas Spring project, and because of this project, it got into some financial issues. There was oversupply of gas eventually in the market. Prices of gas dropped, therefore their revenues dropped, and eventually they became into financial trouble. So in a lot of ways, asset-heavy businesses, their margins are thin. If their assets underperform, they could really get into trouble very quickly. And even for KIT themselves, they own this, which is Buslink. This is actually an electricity interconnector. And back in 2015 December, there was actually a massive outage in Australia. And that was why they got the legal issues. So not only the legal issues, they breached certain debt covenants because of it. So it's a lot of problems when you own assets and that asset gets into trouble. But the good part of things is they've actually resolved it already. This is very latest news, December 2020. They've completed all the legal parts to it. The damages have now been quantified as 38.5 million Australian dollars. So at least there's some closure to things. And a second point that's negative that I'd like to highlight to you is also the CEO, Mr. Matthew Pollard. I took notice of a recent action he did in May 2021. He's actually sold out, disposed of all his equity. If you look, transactions before, he used to own 1/million shares, but after that, in this whole transaction, he's actually disposed away everything. So I'm not too sure what is the reason of things, but I just took notice, and to me, when insiders are selling out so big, it is something that I'll take into consideration. So having said my point, which is I'm not too big of a fan, let me highlight some positives for you. And it starts off with this. Currently for KIT, the debt to equity ratio is pretty healthy. It's only about 32% thereabouts. And that's because they actually did a massive fundraising. They actually raised $500.8 million. And with that, their debt to equity dropped from 41% all the way down to this 32%. They can potentially acquire assets, especially if opportunities come about. And the second part to things is, realize that this trust is pretty stable in terms of share price, and that if you're investing for dividends, KIT pays you about 6.5% in terms of dividend yield. And if you compare that to junk bonds, this is actually quite a respectable amount, and you own solid assets. Whereas junk bonds, you are buying into companies that have poor credit rating that could also default. Leave your thoughts and comments below whether you like Keppel Infrastructure Trust or not. I'll be keen to hear from you also. Again, invite you to subscribe because we are looking at Netlink, whether it's a good topic that we can discuss with you further. With that, I'll sign off. See you in a future video. Take care and goodbye.